Welcome to the 2024 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this August 10th, 2024 Saturday night edition. Please be sure to subscribe to this channel for the latest interpretation of financial news. We're briefly going to be talking about the U.S. economy this weekend and about how the Fed rate cut is still a possibility. And that rate cut is going to be here in September before you know it. The question is, how much of a rate cut are they going to do? Are they going to do something drastic and cut it by 75 to a full basis point? Or are they going to stick with 25 basis point increments as the pressure eases, as the pressure continues towards these rate cuts? So the other states, the other economies around the world, such as the UK, China, Norway, and New Zealand, they're going to keep their rates on hold. In other words, they're going to continue to hold their rates steady. So this is very interesting because is the rate cut the problem with the U.S. economy, or is it more dealing with the job issue problem and the lack of jobs and the lack of good paying jobs and the lack of manufacturing and the taxing of resources in a majority of these cities and municipalities due to the influx of the population growth in different places. So that's going to be interesting to find out. Also, Warren Buffett here just sent $277 billion warning to stock investors. As you know, Mr. Buffett is in Berkshire Hathaway. He sold nearly half of his position, Berkshire's position in Apple last quarter. He's heavily parked in cash, as you know, and maybe all of us regular folks should do the same and wait on the sidelines until this market volatility eases up after next year, possibly. The combination suggests that Mr. Buffett doesn't like what he sees in the market right now, and so he's heavily parked in cash. He's seen this game before, being the Great Depression and then the thing in 2008, the Great Recession of 2008. So he's taking money, he's parking his money in cash. He's in charge of all of Berkshire's equity portfolio. And he's warning investors, look, we got to make these sales. He sold part of it. He feels like it's overvalued. The stock market, Dow Jones, NASDAQ, the Russell 2000, all this is overvalued. And so he's taken too much positions out of Apple, and he stopped buying the stock. And so basically that's a sign, that they're considering, the big money's considering pulling out of these different stocks like Nvidia and all this kind of things like that. And they're starting to realize that this economy is not on a strong ground as everyone said. Mortgage rates have come down. That's sort of a good news for those who are looking to buy a house or a second investment property. So mortgage rates have come down to about 6.8, 6.0, 6.2% of some of these banks, as you can see. But I mean, what's the point of I think the majority of Americans feel like they can get a house. The problem is keeping the house, the extra taxes, the extra, insurances, property tax, all this extra stuff that's coming into play with owning a home. The maintenance, the repairs after 15 or 20 years, you start to, basic stuff, but it definitely has gone up in price. Like the price of a water heater has gone up at Home Depot and Lowe's, or if you need a new air conditioner or a roof or something like that, you're looking at 10, 20 grand or sometimes more than that. For labor costs have gone up in terms of doing, and some people can do it themselves, but not everyone can, do those major home repairs that you may have. So yes, the mortgage rates have come down, but the problem is that rental rates in some of these cities where there's no rent price control has gone up through the roof the last 4 to 5 years, and the landlords are passing those costs on too. But you are more flexible with renting because you can get up and leave. You don't have to you're not locked into a 15, 30 year or term, a variable term or fixed term. So that's one benefit of renting. Even though, like you said, people say, oh, you're throwing your money away. Well, not exactly. If you already have things paid off and you can move around the country freely, then sometimes you're not. You're more flexible than a person who's locked into this long-term mortgage and can't sell it as fast if things could go south in this economy. So Japan and the UK are in recessions. Is the US next? This was a couple months ago on CNN Business. Yes, these economies are all working together. And that's the thing. Once we got into the globalism, the NAFTA, the global trade thing back in 96 and 95, ever since then, everyone's kind of interconnected together. So Japan, UK, other countries in the Eurozone and outside the Eurozone and Asia and also in the developing countries, they're going through a mild recession right now. And if spending stops in the U.S., like I said, if it slows down, we're going to be going into a recession because people just don't have the disposable income outside of paying bills and, having, a few little moments of fleeting happiness with entertainment or whatever the case may be. That means that, globally, this economy next year, and I think the Economist magazine predicted that next year, GDP growth is only going to be in a handful of countries that's going to be above 3%. If you look at the charts that comes out of Economist magazine. So it tells you that the world economy is going into a recession, and we've been in a recession, like I said, on my channel since the last 5, 6, 7 years, and now we're heading toward that depression territory unofficially, I should say, because by the time they tell you in the news that you're in a recession, it's already been in a recession for a year or two, and then they tell you, oh yeah, look, well everything is going down now. We've been in a recession. So will there be a U.S. recession in 2024? Time will tell. Once again, it's supposed to be a double dip. We have 2 quarters of negative GDP, quote unquote, but that right here it says right here 2 quarters negative GDP. It says in the article. So it depends. It depends on if the rate cuts make a difference. If the Fed comes and cuts the rate twice this year, and most senior economists are only expecting 1 or no rate cuts at all, then yeah, most definitely in 2025 we're going to be in some type of slowdown or recession. And then if these prices go up, particularly gas, food, utilities continue to go up through Christmas, then yeah, we're going to be in a recession territory in 2025. And so remember, the stock market can continue to melt up. That was what we seen in Venezuela's economy, Turkey, Greece, Sri Lanka, all these countries that either currency collapsed or the economy collapsed partially. Then all of the stock market was still going up. Their individual stock markets are going up. So the Dow Jones, it may recover to 40,000, 45,000, whatever. That doesn't necessarily mean that Main Street is doing good. That doesn't necessarily mean that everybody in the country is living good. So conditions can change drastically here. So in the meantime, enjoy your weekend. Continue to prepare, ladies and gentlemen. We have time, but we don't have much time as everybody thinks we have, because like I said, one black swan event can turn these things around. So make sure you take care of the basics: food, water, security, medicine, silver, gold, maybe cryptos. Not much into that, but you could do that if you so desire. And that's pretty much it. So I'll talk to you later once we get this week going. We're going to be talking about earnings of these companies later on. Thank you for listening. Have a blessed weekend. Take care.